The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 11th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets, what it is that they're communicating to you and I at just past 1 o'clock in the afternoon on this terrific Thursday. I want to tell you that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone at any time and dial on into 877-927-6648. Internationally, 727-445-1044. Of course, you can always ping me inside the Tiger's Den. You can send me an email, steve@tfnn.com. I will try to get to every and anything that you are requesting. On this terrific Thursday, of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow. She's trading off 330 points, trading out at 15,584. S&P off 29 points, trading at 1821. NASDAQ Composite, fairly impressive out here. That's off 35 points. That's been the week indices. So we spent time yesterday. We spent time probably the day before. We're going to spend some time taking a look at the NASDAQ Composite, the NDX 100, the NQ out there. The Russell 2000, she's off 10 points. That's trading out at 953. The DAX closed down 264 points. The FTSE off 135. Gold, how about gold? Heading for them hills, up $52 right now, trading out at 1246. Silver's up 54 cents, trading at 1583. Light sweet crude black Texas tea trading down 78 cents, trading at 26.67. I like that number, 67. Yeah, add it up and you get lucky 13 out there. We've got lead the charge here to the upside. AutoZone in a zone all on its own, up 2.5%, up $17.77. Chipotle up 17 buckaroonies. That's up nearly 4%. Priceline up $15, 1.5%. O'Reilly Automotive up $11 out here. Amazon is up 10. TripAdvisor's up 9. That's the 17% move to the upside. To the downside, dollar-wise, you've got international flavors. Flavors, I don't know what that is, but what I do know is it is down 13%, nearly $16. Boeing off 10%. That's down $11. Insight Corp, it's one of the top 5 holdings, I believe, inside the IBB. That's down $12. I think that it is. Acuity Brands is off $11. Bunge Limited down 9. But let's go out to Larry in Cheyenne and say hello. Hello, Larry. How you doing this afternoon?
Well, I'm doing good. How you doing, Steve?
Excellent. Thanks so much for asking. Yeah. And you're taking a look at a stock with the ticker symbol AMPE, Ampio Pharmaceuticals. Is that the correct pronunciation?
That's
Probably
right. That's correct, Ampio. And, it's one of these gym buddy recommendations, but actually, when I looked at it, it's retesting on the weekly, it's retesting its low point. I call it X. It looks to me like it's doing a 618 Gartley buy on extremely low volume on the weekly.
So, Larry, on the weekly chart,
I like indexes, but the trade would be easy because I could put the stop right under the X point of May 18th.
So you're looking at May 18th from a weekly standpoint. Is that what you, or are you looking at that? You are, okay. So the week of May 18th, has 14 million shares down there.
That's
and
right.
the top of that swing point is $2.27, and the bottom is 153. Now, with this trading at $1.84, volume, as you pointed out, is light. 780,000 shares going against 14 million. That's telling you, that's the type of volume you like to see coming into a swing point. Our problem on the weekly chart is as follows. The first is that until this close is above $2.27, you have not gotten a rejection of a swing point. You've got price moving into a swing point with light volume, but as long as it trades inside that, it says that, it could go test the 153 level. So what type of trade are you looking at inside of this? Is this do you know something about the company? Is this a long-term type position?
Right.
Because the price of it at such at $1.83 or $1.53, you could take the approach of, in essence, buying an unexpired option.
Well, that's right. That's exactly. I mean, Steve, you know more than me. I for a year, this guy's been talking this company up. I've watched him ride it up and down. I took a little trade in it. I made a few dollars on the that up leg, but I just see this as one of your classic patterns where, like you say, you can put the stop right under 153, and if even on the daily chart, it's a lousy hammer by your teachings, but if it starts to get a reversal signal here, I guess I would take the trade. It's got a bright future if it works.
So, if I take a look at the weekly chart, the daily chart. Okay, so the daily chart right now, there's a swing point from January 20th. Light volume traded, but let's just use the textbook examples here. So that price point of $1.99 with 400,000 shares, is important. And prices below that level, albeit on light volume, only 111,000 shares today. But when you close below a swing point, now, if we're trying to figure out what else could this possibly be doing, this thing had a little bit of a breakaway on May 21st when it did 10 million shares to the upside. And it, in essence, has come back into that area on light volume. So, I still think that as I would take a look at this chart here, if you're going to go ahead and take a trade, I would just simply allocate 1% of my funds, whatever that is. So on $10,000, it would be $100, and I would take the $100 divided by my entry price, and that's how many shares I would buy at this stage. And I would really let this thing prove itself to you.
Okay, this is not something you would touch based on the patterns.
Well, I don't like dollar-oriented stock charts with no volume in it, basically. 100,000 shares today, you're not really going to be able to get out if you were taking this as a trade, that's what I was saying. If you're looking at this for some reason as a long-term trade, look, you can recover from losing 1% of your trading capital. That's easy to do. And so I don't, and it's also, if you know something about the company, treating this as an unexpired option, if you're just allocating 1% of your working capital to it, and if they go out of business, you're okay. And if it takes off, if it really takes off, then you've made money, and you can always reconsider it then. All right, my friend.
All right, thank you so much, Steve.
All right, you bet. That was Larry in Cheyenne taking a look at ticker symbol AMPE. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 325 right now. S&P is down 30. So just to, in essence, review what we were discussing during that last segment, what Larry and I were discussing. You know, if you're looking at some type of stock, a low-priced type stock, and I would consider anything in that dollar range a low-price stock out there, and you're looking, especially when something's been so beaten down, and this is an equity that most certainly has, doesn't have any kind of volume at the highs to, you know, give us an indication that this wants to, you know, at some point in time in its life, go ahead and get up to that, you know, those previous highs, which in this case would be about $8.56. The easiest way to trade it is just simply, as I say, take 1% of your trading working capital, whatever that is. I like to use just think of increments of $10,000. On $10,000, 1%, $100. So that's what you're risking on the trade. Take $100. In this case, you'd buy basically what, about 50, 60 shares. It's priced at $1.82 right now, and may not seem like a lot if this thing 60 shares gets up to $8. A great return on your money, but you got to really be thinking about what it is you're doing, which is protecting your capital out here. And that's how I would trade something like this. And then it's an unexpired option, right? It's never going to expire, and you can always add that unexpired option using the same rule out there. If this thing moves to the upside, I wouldn't be adding to it to the downside out here. You want to add to a winning trade, not really a losing trade. Had a question inside our Tigers Den asking if we could take a look at the IBB, I believe it was. Let me see here if I can find that. Steve, what would be your short, intermediate, and long-term target on IBB? Well, I don't know, but let's go take a look at the IBB, which is the biotech sector for the NASDAQ. Let's take a look at the monthly chart and figure out what it is doing. So on a monthly basis out here, I would say that the IBB on a long-term basis needs to break through its trend line. So if we take a look at trend lines out here, give me a moment. I'm looking at coming off of the lows here from October in 2011. And then I'm using as a touch point out here, the bottom of November 2012. That gets us down to somewhere around the 235 type level. If, in fact, price is able to break through the 235 area, we can see that on a long-term basis, what IWM did was it completed a 1-to-1 A to B equals CD off of that swing. Well, actually, a swing point that was just a couple of months before that in August of 2011. The price projection, by the way, on that was 398.92. The actual high inside of IBB was 400.79. You got to like that? Off by about, less than $2 or so from the, as far as its price projection. Nice, good old bearish engulfing candle and some volume coming off of this equity. And from an A to a B to equal that C to D standpoint, the B point, which is from the trading week month of August in 2015, 45 million shares versus last month's 61 million shares. So you've got a confirmed A to B equals CD to the downside. Let's just take a look at where that price projection would take us. Give me a moment here while we punch this up on the screen. And that gives you a price projection. How about that? That gives you a price projection. The 1-to-1 is where we're trading at right now. We're trading just slightly below it. That would have been 249.93. You're 244.19. And so I would have to say, I'm going to answer it this way. Until you break the trend line, which is going to be somewhere in that 235-ish area, 235, 6, 7, something like that, this is completed. A longer-term A to B equals CD to the downside. And until it breaks that level, that might be it. If it does break that level, then the next price projection is 218.21 out there. So now let's just go take a look at the daily charts inside of the IBB, see what kind of information or message that we've got going on out here. Pull this back. So the most recent swing point that it is contending with on a daily chart is October of 2014. And that's where the market made a fairly significant bottom. You've got the price point there at 247.86 and volume at 2.7 million shares. So what is this thing doing around here? It's trading in that area with slightly higher volume. You can see that trend line again coming off of the on the monthly chart. That's the diagonal line going on my screen out here. I don't see anything that is a bullish reversal signal just yet. So it says price probably goes down to test that trend line. But until it breaks that trend, that really could be it. So I hope that assists you. Now, let's just put one more thing up here on the screen. Let's go ahead and see what our horizontal levels of support and resistance might be, see what they show us as we take a look at our TAS market profiles. And they're not providing us with any type of information. So I'd say the trend line is the target for the IBB. Okay, let's go take a look at what's going on inside of the NASDAQ out here. And let's go to a shorter-term time frame. And by doing that, we're going to get a feel for what's been going on during the day, during the evening of last night, and bring us up to speed as to where we're at. Now, here's what's going on a 30-minute time frame basis. What we know about the NASDAQ, and we took a look at this yesterday because it was yesterday when this formed, one of the patterns that I'm going to be teaching you all about in this evening's workshop. That's from 6:30 to 7:30. If you can't be there, I understand. It's Thursday night, maybe it's Sake Thursday for you. Maybe it's Cabernet Thursday. Maybe you just can't be there because of other obligations. The beauty here at TFNN is all of our workshops are archived, so you've got access to it for the next 30 days. One of the patterns here that formed the top, by the way, inside of the NQ on its 30-minute time frame is the same pattern that has formed here earlier this morning as price was moving lower. And that's one of my favorite patterns, and we'll be teaching you all about that this evening. Notice how price at the time frame of 7:30 this morning inside the NQ was moving lower with what? Moving lower with less relative weakness out there. And then the cavalry arrived. And I'll be teaching you about that as well. It's so important, such an important tool out here, how to identify it, what you're looking for. And the cavalry arrived at 7:30. And what you and I want to do is simply pay attention to patterns out here. Turn off the news, turn off the fear, turn off anything, and just follow along, because these are repeatable patterns, and they're patterns to be paying attention to. What we have right now going on, and we've come off of the bottom inside of the NQ on the 30-minute time frame. So that pattern, which identified a bottom-forming pattern, in addition to the market profiles that are out here, which we'll also be covering this evening. we can see that it has just simply done a retracement into, well, first it made a high out here at the 10 o'clock time frame. So the market moved higher, and I say Janet Yellen, Janet Schmellen out here. Thank God she's done talking. Now we can get back to just simply markets out here, or at least I hope she's done talking out there. And now we can get back to just simply patterns and not worry about, you know, her influence over what the market does. Now it's up to the market fulfilling these patterns and what it is that we're going to look for. And if we do take a look, so you had a high going in at 10 o'clock and then a retracement. I'm not going to go calculate that retracement, but it looks like, you know, 50 to 61% retracement. What we do know is there was a brand new market profile that formed at the 11 o'clock time frame. And that profile here formed a little bit biased to the bullish side. That says to me that the NQ ought to make a run for the 39.56 level. At 39.56, that's where the snipers are hanging out. That's where the sellers are. And if they can snipe enough bulls out here, they'll run the price back down to 39.18. And if they get overrun by a bulldozer, you'll get an A to B equals CD to the upside. We'll go calculate that when we get back from this break. And then we'll go look at some other time frames, because I don't know what the 120-minute time frame chart shows, but we're going to go find out. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 321. Before we went to break, we were taking a look at this pattern here inside the 30-minute chart for the NQ. Now, when price made that first move up this morning, we can see that, got above the market profile high out there, and then it stopped really dead in its tracks right here. Again, that price point where it stopped was 39.56.25. Now, if we just simply take a look at the message of our Japanese candlesticks out here, price stopped at a logical place. What do I mean by a logical place? We'll take a look at that bearish engulfing candle that formed at 3:30 this morning. Now, all the action, all the major action seems to be starting when Europe is coming online, at about 3 o'clock in the morning out here. And you can see that price, and that's a resistance line. So that resistance line, the exact number on it is 39.55 and 75 cents out here. The actual high was, 39.56 and a quarter out there. So you can see that that is a big resistance line. It also happens to match, in essence, up with the top of that new box out here. So that's going to give you an important message. I would anticipate at this stage, the way that I'm looking at the chart here, the preponderance of evidence says that if price moves higher, it's going to run into that level. It should run into resistance. And if you can clear that, there's where you get your A to B equals CD to the upside. Now, this could just be setting up a Gartley sell pattern, which would be logical. And that would take you into the 39.90.50 level. That would be your 1-to-1 A to B equals CD, but it's got to get above 39.56, and that's going to be some rough sledding out here. So that's what's going on the 30-minute time frame chart. I did mention to you that we take a look at the 2-hour chart, so let's go do that. Let's look at the 120-minute time frame. Let's go see what pattern or patterns are out here, if any, and really several. You've got really a couple of patterns. Let's go ahead and let's turn off all the wave counts at this stage of the game, since I don't really see one that we've got to pay attention to right now. Let me update this chart here, make sure. So we can see on the 2-hour basis as well, we've got an A to B equals CD. That was a 1 to 1.6, 1 to 8 price projection. Once price started moving back below 39.28 last night, didn't get down exactly to that level, but that's where we go ahead and use that as a guideline, not as a, it's got to hit the specific price target out here. And what price was doing as it was moving lower, both at 4 o'clock this morning, then at 6 o'clock, and then again at 8 o'clock as price was moving lower, as there was a lot of the sky was falling fear that was out there. Price was moving lower with less relative strength out there. Nice, good old bullish engulfing candle that formed at 10 o'clock. Now, this shows resistance at about the 39.60 level. That's a brand new supply area provided by our TAS market profile. So getting about 39.61, would be, that's its hurdle. So we've got the hurdle or the levels of resistance of where the snipers are hanging out on the 30-minute basis. So we've got different front lines out here, if you will. And 39.61 is going to be what we're looking at on the 2-hour chart. As long as we're here, let's go take a look at the 5-hour energy drink chart out here. Let's go see what it is communicating to us. And voila, lo and behold, it too was moving lower with less relative weakness out here. So we can see that the move really, look, this pattern here that I'm sharing with you, I mean, my goodness, it is so good at being able to help us understand what the markets are really doing as opposed to listening to the stuff that's coming off of the tube out here. Now, this 5-hour chart does not complete till 2 p.m., I believe, is the next candle. So we're in the candle formation, so it's got about 26 minutes. Is that right? Yeah, 26, 24, 25 minutes out here before this forms. Price right now is stuck right at its fair value, right at that point of control, right at the 39.38. A 5-hour chart's going to trump. I don't mean Donald Trump. It's just simply going to trump the 2-hour chart. The 2 hours is going to trump the 30-minute chart out here. So we can see this 39.40-ish level, is a key area of where price is just comfortable. So if you get above 39.40 with any conviction, we'll call it 39.50. Those other levels that you and I took a look at ought to come into play out here. Now, speaking of things moving lower with less relative weakness out here, let's go take a look at the Wilshire 5000. We don't often do that, but let's go ahead and do that today. And as we take a look at it, we know about the Wilshire 5000. It made a high back in, this is a daily chart we're looking at, November 4th, 2015. And if we start counting the lower lows, lower troughs, if you will, coming off of that high, we're going to see that today, as price moved lower, It has made that 7th inning stretch candle. We're going to talk about that tonight as well. Now, it did it with a gap to the downside. Of course, everything was gapping to the downside. But inside the Wilshire 5000, it's moving lower with less relative weakness as well. Now, this is a daily chart. Daily, is going to trump a 5-hour, 2-hour. You know how it goes out there. So you've got an A to B equals CD pattern out here. I won't draw that in at the moment because the tool is not on this, specifically on this screen for the moment. But bottoming type forming formations out here. Does that even make sense? Last time that we had price moving lower with less relative weakness out here inside of the Russell was back on September 30th. Of course, the cavalry came in on the next day. That was October 1st, and you had a fairly nice bounce out there. Let me pull this back off to the side. Let me just do this. Let's take the Wilshire on a daily chart here. Let's go add a number of days. Let's go take this out for 10 years and see how important those bottoms are or tops inside the Wilshire 5000 with price moving lower with less relative weakness out here. See if we've got any others to pay attention to. I'm looking really at the bottom. So you had one formed back here on June 5th, 2012. That formed a significant bottom once the cavalry came in on June 6th out there. Let's keep going. You had another one of those form during the October. That's during the European crisis situation. Crisis situation. You got to love it. That's, I think that who popularized the term crisis situation? I'll wait for somebody to put that in the den, and maybe we'll go into our grab bag. Maybe there's a toaster or something that we can give away. I don't know if there is, but who popularized, I'm just curious, crisis situation? I don't know. I've seen it in a few movies out there. And one of those that I can recall, I'll give you a hint, was with former governor or muscle builder Schwarzenegger and Danny DeVito out there. But in any event, Wilshire 5000 moving lower with less relative weakness back on October 5th, 2011. The cavalry did rush in there, and we saw the markets move off of that bottom out here. So I'm just saying that it is a pattern worth paying attention to. We had another situation occur back in July of 2010. That formed a bottom. It actually formed a nice little 4-river morning star pattern out here. So just worth paying attention to. That's as far back as I can go into the Wilshire 5000 out there. Okay, let's go take a look at some other things in the market because there is plenty to take a look at. So let's go hunting around and see what's going on inside of gold. Let's go see. You get gold up 57 buckaroonies, 1251. I wish I hadn't sold my nugget for a 92% profit and held it. Right now, we'd probably be about 150 or 60%. But I'm never going to complain about making money, nor should you. It's a beautiful thing. So we get back from this break. Let's go take a look at where gold is headed to. Looks like unless this is a blow-off top, and that's a possibility, if it is not, we're looking at gold headed to 1281 next, the 1.618 expansion of its last set of swing points. See Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We'll get back to gold in a minute. I had a question that came in, asked if I would take a look at the Fibonacci retracements on oil. So let's go take, and that's all I have, so that's not a lot of information to go on. But let's go take a look at what oil may be doing here. It's trading lower, that's for sure. It's off of its lows of the session, but it's right now trading out at 26.82. And that means that it's trading below the low of the swing point from January 20th out here. That price point is 27.56. So in order for price to reject that swing point, it's got to get above 27.56. Now let's go see on a very short-term base daily chart that we're looking at. But let's stay in the sandbox between January 20th and today to see what kind of patterns are out here. So the very first thing that I see is a small A to B equals CD pattern. Let's go ahead and take a look at those price projections, right? Because this is how you and I project the future. That's the beautiful about technical analysis. We have tools where we can project where price is heading. If in the case of light sweet crude, it does not get it back. It does not. How about that? If in the case of light sweet crude, it does not get back above 27.56, the low of January 20th, then without any kind of bullish reversal signal here, this says that the price of light sweet crude is targeted for 24.83. That would be your 1 to 1.618 A to B equals CD. Now, the question is, has it already made a butterfly pattern, or is it going to, and what are those price projections? So how we would determine that is we'd look at that low from January 20th. We come all the way up here to the high on January 28th, and the 1.272 expansion is 25.59. So I don't necessarily need to look at retracements at this stage because, I mean, I will for you, but I'm not sure what I will accomplish there. There's nothing here that would indicate that light sweet crude has found a bottom. Not yet. Maybe the cavalry isn't that far behind. If we take a look at this daily chart, it says you're looking at 25.59, 24.83 as potential logical price targets. If we go ahead and put up our market profiles, let's see what we've got out here. Absolutely nothing. So we know that price is below that, so there's no demand area utilizing those hidden secrets out here. If I look at a 30-minute time frame, let's go look at that. short-term time frame. If we take a look at light sweet crude, there's absolutely no pattern here. When I say pattern here, I'm looking for like an A to B equals C to the upside, something going on. There's not anything here on the 30-minute chart that suggests that any kind of bottom is in. You can come back on a 30-minute basis, maybe look at the low this morning at 7 o'clock and say, you know, was 26.22 tested with lighter volume? Never got back down there at the time frame of 11 o'clock this morning. So I'm not seeing it. But to answer the question, if I can take a look at retracements, let's do that. And the only retracement that I would really look at here, because I like to answer the question, let's go ahead and get rid of this. And let's get rid of the A to B equals CD pattern out here. Let's take that off of our screen. So retracements, you know, I just come from the last swing point. February 4th down to the low. Oops, I got to move it off of expansion to retracement. So if we take a look at retracements here, you know, if a bottom is formed, first level is going to be 29.04. The second level that you'd be looking at is $30.78. That was on Texas T. Light sweet crude. Now back to Goldilocks out here, up $53.50. You can't discount this being some type of blow-off top. You know, what do we call it at the bottom? We don't call it a blow-off bottom, do we? So tops we call blow-offs, and bottoms we call what? Capitulation lows out here. So this would just be the opposite. At this stage of the game, what we can see, and we just took a look at an expansion of swing points inside of light sweet crude. Now we're looking at a set of expansion between swing points inside the current contract for gold out here. And that's going to be from the price level of $11.91 down to $10.46. The very first expansion level of that is $12.31. Now we can see that we're trading well above that, and price here has moved into that level with a wide-ranging bar. There's no other way to look at it. That's a wide-ranging bar. Typically, markets don't end on wide-ranging bars out here, and so as long as price, we'll say, as long as price stays above 12.25, you've got a wide-ranging bar, and that would say price should go to the next level. The next pricing level target is 1281.70. You know, short of the bears showing up out here, that's what it looks like gold wants to do. With regard to silver, silver's trading out at $15.80. That's up 52 cents. It's got a nice move going on today as well. And silver basically making a 100% move of a move. If it can close above 15.79, and you're at 15.80 right now, then you close inside the swing point from October 28th. And that would say you could run all the way up to 16.41. If you don't, you know, we have to go back and take a look at volumes. We're not in the right contract for me to go see what the October 28th swing point had. You know, we might be able to do it by get an idea by taking a look at SLV. So what is that? That's going to be October 28th. Let's go see what volume is in. Oops, that's not going to work. So I'll see if I can do it this way. Will that work? There we go. So October 28th is the number we're looking at. And October 28th, the volume there was 11.5 million. You've done 15 million. So pretty safe to say, if price can close inside that swing point, again, that's $15 inside the SLV, you're at 1503, says you go test 1560. If price closes below that, the interpretation is you're going to be back up to test the swing point. That would at least be the low, $15. So that's what's going on inside the metals marketplace. Let's see, what else can we go take a look at out here? Let's go look at some of the ETFs. Let's go take a look at some of those that are being trashed out here, and that being the financials. So down 60 cents out here, gapping down this morning. Volume on it, 60 million shares. Volume on August 24th is 116 million. So moving on down and doing it with light volume out there. But you're really in nowhere's land when we take a look at that swing point. It's tough to even really figure out whether that, you know, that price down there, is it real? Is it not real? Is it Memorex out here? But at this stage, so where's price headed to? You'd have to say probably headed to the low of that swing point, which also is going to match up with your June 24th, 2013 area. So That's what the XLF is saying. Let's go look at the XLK, see what it is doing out here, see if we can get any more clearer picture. Inside the XLK, this thing is just dealing with the swing from January 20th. So here's where you could glean a lot of information. That's the number one sector inside the S&P 500. 29 million shares were had on January 20th. You're only at 13 million right now. I don't think that equates to similar volume on a straight line basis, but let's go take a look at it. So XLK, 13 million. We've been trading for what? 4 hours? Almost 4.5, right? Yeah. We're going to call it just shy of 4.5 hours out here. That says you're going to do inside the XLK around 19 million versus 29. So unfortunately, no test out here. There's no piece of information being released to you and I. If the XLK could test 3803, that's the low of the swing point it's traded, and then it could reveal a piece of information to us. Right now, the information that you and I know is the Dow's off 340, S&P down 32, composite down 46 points. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 32 right now. And if we take a look at the VIX contract, the cash VIX versus the forward contracts out here, it's all backwards. What do they call that? Backwardation. You've got the cash spot price, cash price of the VIX trading at 28.82. And if you go all the way out to the October contract inside the VIX, October 2016, you're at $24. So this stuff has to come in line. That is not normal. That's more what this is more of a signal of, until things get back in line, quite frankly, is just a lot of panic selling. That is not bled over into the front months out here. Now, the current month, yes, but beyond that, you've got all of the futures contracts at lower prices out here. So we'll see how that resolves itself, but that is its message out here. If I look for oversold levels or anything significant inside of the advanced decline oscillators out here, you've got the New York Stock Exchange down at its bottom worthy level of about minus 150 or minus 150.89 out here. And you still have the hammer candle inside the New York Stock Exchange that has held that support as we speak right now. If we take a look at the low there, it's 89.37. That's the low from January 20th. By the way, that's the daily hammer. That's a weekly hammer out there. So maybe it'll be tomorrow that it gets tested. Low so far, 89.66. And that's what's going on inside the New York Stock Exchange. Let's come back here and so again, let me talk about the workshop just for a moment. Great deal. We're going to cover a lot in an hour. It doesn't matter what level of skill. So the way that I put together these workshops, it doesn't matter what level of skill that you're at. If you're a beginner, well, first you have to have the need or the want to take a look at these different patterns that we trade. And if you do, then this is going to be a great workshop. You know, if you really want to understand the A to B equals CD pattern, you want to understand how to identify reversal areas. If you like the price relative strength divergent pattern, if you like the seventh wave count out there, then this is absolutely a workshop that's a must. We've made it super easy for you to attend. All you have to do is come over to the homepage at TFNN.com and sign up for it. You're signed up for my newsletter service, which you get for the next 30 days. That comes to you for free out there, so you're going to get that as well. I'm going to teach you about the logic behind why we take the trades that we do, what we do. There's other bonuses. You know, money management, as we were talking, as Larry and I were talking at the opening hour, money management is really the key to this game out here. You're never going to have all winners or losers. You can recover from 1% losers out there. You can, look, we did this all last year. And in a market that was a down year, we produced nearly a 13% return out there. So just steady as it goes. And that's what you can do just simply by risking only 1% of your working capital. So come on and join me. Like, if you can't be there, as we said, no problem. It'll be archived and back up on your members page by Friday. I promise you, you will be extremely happy that you went to the workshop. The information I'm going to provide to you is information that will shave. No, and even if you are a very experienced trader, there's always a morsel that you can pick up. Those morsels are usually worth years of your own do-it-yourself investigating. So go ahead and join us. In any event, stay tuned. Our man David White is going to be up next. And then it is Terrific Thursday. We got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6, and Steve-O, me, will be back with you from 6:30 to 7:30. So have a great day, and I look forward to seeing you tonight or tomorrow on Fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.